Hi, I'm Bobo. In this week's recap, CK Asset launched its last batch of 44 units of the coastline at original price. This included 28 duplex units and special units featuring rooftops. The developer sold nearly all units as buyers snapped up 40 units over the weekend. Also popular was the new project Villa Garda III in Kwan's Lohas Park, which sold 138 units in its first round of sales last Saturday at 16,000 Hong Kong dollars per square foot on average. Not only is this price almost 8% lower than that of the last phase, it's also the cheapest new development in the area since 2018. However, only half of the 74 units were sold in one day, due to a large inventory of unsold units in Villa Garda's Phase 1 and 2 developments. Altogether, a total of 135 units were sold, including Manor Hill in Kwan and Henderson Land's The Holborn in Quarry Bay. Unlike new developments, the rest of the market has been a little slow. The tender for a land for starter homes in Yau Kom Tau, Kwan closed last Friday with only one bid from Grand Ming Group, which was eventually withdrawn as it failed to reach the government's reserve price. The site is valued at 2.3 billion Hong Kong dollars to 4.19 billion Hong Kong dollars at 2,200 Hong Kong dollars to $4,000 per square foot. As for upcoming developments, we have Mori in Chunmun, which was developed by Road King and Shenzhen Investment. The developer will be uploading the project's sales brochures and unveiling showrooms in early September, with units to be launched in mid-September at the earliest. Asking prices are expected to be based on those of recent first and second-hand developments in the district. Case in point, 400 units of Grand Jetay's Phase 2 development was launched in April this year at a 10% price reduction, just over 12,000 Hong Kong dollars per square foot on average, so this may be a useful reference price. Some more details about Mori. The project comprises 4 towers and 14 detached houses to feature a total of 693 apartments. The project offers floor plans ranging from open plan to 4-bedroom with a focus on 2-bedroom units and has an estimated material date set for the end of June next year. In other news, the second-hand market continued to slow. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded only 3 to 4 transactions for the city's top 10 blue-chip housing estates. This is the 4th month in a row that trading has hovered in the single digits, with some owners selling their homes at lowered prices, even if it meant leaving the market at a loss, with some losing millions in the process. On that note, let's check out 4 cases of price reductions. Our first case comes from Kwan's Metro City. This was an upper floor apartment in Phase 1's Tower 1, measuring 420 square feet with 2 bedrooms and a southwest-facing private garden. The unit was initially listed at the end of July this year for $7 million, but the homeowner had to lower the price several times before it finally sold for $6 million, or at $14,200 per square foot, down 1 million Hong Kong dollars or 14% from the original price. Though this is in line with market price, the final price is still more than 15% lower than bank valuation estimate. However, as the original owner bought the flat in 1997 for 3.96 million Hong Kong dollars, they still made a huge profit of 2.04 million Hong Kong dollars, indicating a rise of 52% in appreciation. Nearby, many Lohas Park homeowners faced losses as they competed for buyers with new projects in the area. This was the case, at least, for a top-floor unit in Block 5 of Lohas Park's Phase 6 development, a 1-bedroom unit with sea views measuring 306 square feet. Reduced by 1.75 million Hong Kong dollars, or 25% of the original price, the flat eventually sold for 5.05 million Hong Kong dollars at about $16,500 per square foot. Once known as the project's largest 1-bedroom unit, the owner bought it in 2019 for $6.79 million at $22,100 per square foot. The record remained until the following year before it was broken by another flat on the same floor. To start with, the owner had set the asking price at $6.8 million, only slightly above original asking price. But ultimately, they had to reduce by more than $1 million before they could exit the market. If we take into account additional expenses, the owner lost about $2.5 million, or 26% in depreciation. Our third case comes from Tierra, Verde in Tsing. This was an upper-floor, two-bedroom apartment in Block 5, measuring 520 square feet with southwest-facing mountain views. It was put up for sale at 9.5 million Hong Kong dollars in July of this year, but its price was eventually reduced by 920,000 Hong Kong dollars. That's about 9.7%, and sold for $8.58 million at $16,500 to a tenant in the neighborhood who bought the unit for self-occupation. The original owner bought the flat in 2019 for $9.3 million and held it for 4 years, losing about 720,000 Hong Kong dollars or $1.2 million if you include additional expenses. Apart from private developments, we can also spot this low price trend in subsidized flats such as Broadview Court in Wong, Chuk. A middle-floor unit in Block 2 measuring 591 square feet in size sold for 5.35 million Hong Kong dollars at 9,000 Hong Kong dollars per square foot, about 23% below market price, which marks a 6-year low. The unit came with 3 beds and 1.5 baths, offering both city and mountain views. With an initial asking price of $6.75 million, the original owner had to lower that price by $1.4 million to sell the flat. Nonetheless, they still made a profit of 3.09 million Hong Kong dollars, as they had bought the flat in 2010 for $2.26 million, premium unpaid, and held the flat for 13 years, subsequently booking a profit of $3.09 million. Amid a bearish market, buyers are maintaining a cautious attitude, so expect a stagnant second-hand market for the short term. Now, it's possible that the government's upcoming policy address in October could shake things up. Could property measures be relaxed soon? We'll have to wait and see. Either way, that's all for now. See you in the next.